Ladies and gentlemen, a big thank you to Peter White from the Finance Brokers Association of Australia, who kindly invited me to address the 2020 Industry Commercial Masterclass, and to Peter Switzer for hosting today's digital event. I also want to acknowledge Glenn Mitchell for helping establish this event and being a strong supporter ever since. And it is fantastic to see that this year, with everybody feeling the impacts of COVID-19, that this great initiative has been extended to the entire industry for free. I'm delighted to join this e-masterclass to provide an update on what the government is doing to support small and family businesses during these difficult times. This is the greatest economic challenge we have faced since the Great Depression. And I know that it has had an immense impact on people's lives and livelihoods. Different sectors face different issues, but the number one thing you all need is a safe and sustainable reopening of the economy. Australians have shown incredible resilience in the face of the twin health and economic crises. But it has not left us untouched. Thankfully, our actions have limited the worst effects of the virus, avoiding the predictions of hundreds of thousands of Australians being infected and tens of thousands of deaths. When compared with other developed nations with advanced health systems, Australia has performed remarkably well. The United Kingdom's death rate is around 160 times Australia's, the equivalent of over 16,000 deaths in Australia. And we know from the outbreak in Victoria that the fight to contain the health impact of COVID-19 has not ended. Managing the outbreak is having a huge economic cost to Australia. Every week of restrictions costs our economy around $4 billion. Every job that is lost is devastating and highlights the need to get our economy going again in a COVID-safe manner. The Morrison government is fully aware of the ongoing twin challenges we face as a nation, protecting both the physical and economic health of all Australians. That is why the government put in place a suite of measures that are targeted and proportionate to support the economy and households to get through the economic crisis. Recognising the threat to jobs and businesses, we announced JobKeeper and the JobSeeker supplement early, when uncertainty was at its highest. Along with other measures, the government is injecting some $260 billion into the economy. We are seeing the government support measures flowing through to the economy. Under JobKeeper, more than 950,000 businesses, employing more than 3.5 million workers, have had their applications processed, with more than $24 billion of approved payments made. The cash flow boost has been flowing into bank accounts of small and medium businesses. With tax-free payments of between $20,000 and $100,000, over 750,000 businesses are accessing around $15 billion in assistance. The Morrison government also extended the $150,000 instant asset write-off for 6 months to the 31st of December 2020. Every year, we know that over 300,000 small businesses utilise the instant asset write-off to invest in their business. It supports businesses to reinvest in assets for their businesses, including tractors, vans, equipment and machinery, tools that are essential to helping their businesses to expand, grow and ultimately employ more Australians. As the economy reopens following COVID-19, schemes like the instant asset write-off will be critical to supporting businesses to reinvest back into their business. Australian businesses with annual turnover of less than $500 million will be able to take advantage of this extended time frame to support their business to continue investment they had planned and encourage them to bring investment forward to support their business to grow. The extension also gives businesses additional time to access their investments where they have been delayed by supply chain disruptions. This not only provides vital cash flow boosts to businesses, but will encourage economic growth by accelerating business investment. This builds on the substantial economic stimulus measures that the government has delivered to support small and family businesses. You will be aware that the Treasurer will be announcing on the 23rd of July the next phase of support measures that will be targeted, proportionate and temporary to ensure that we all get through this economic crisis. Ever since I took over this portfolio, one of the consistent things I've heard from small businesses is the challenge of accessing finance. The ability of small business to access finance is critical to funding day-to-day operations and to undertake investment and create the jobs of the future. That is why the Morrison government implemented a number of measures to support the flow of credit in the economy during COVID-19. Under the Coronavirus SME Guarantee Scheme, the government is providing access to working capital by providing lenders with a guarantee of 50% of new unsecured loans up to $250,000. To date, around 15,000 businesses have received $1.4 billion in loans under the scheme. We also cut red tape by providing a temporary exemption from responsible lending obligations for lenders providing credit to existing small business customers in order to help small businesses get access to credit quickly and efficiently. The RBA announced a $90 billion term funding facility for the banking system to put downward pressure on borrowing costs for households and businesses. The government is also providing the Australian Office of Financial Management with $15 billion to invest in structured finance markets used by small lenders. And APRA announced temporary changes to its expectations regarding bank capital ratios to support banks lending to customers. However, even before we were confronted with the challenging economic effects of COVID-19, the Morrison government was committed to supporting small businesses' access to finance. That is why we made an initial commitment of $100 million to the Australian Business Growth Fund alongside 6 banks for a total of $540 million, which we are looking to grow to $1 billion. The Growth Fund will provide SMEs long-term equity capital investments between $5 million and $15 million, where they can demonstrate 3 years of revenue growth and profitability and a clear growth vision. Businesses with an annual turnover between $2 million and $100 million will be able to sell stakes of 10 to 40% to the fund for cash that is to be invested in equipment or fund expansion into new markets. The Morrison government is also enhancing access to funds for small business through the $2 billion Australian Business Securitisation Fund. The fund will invest in the market for securitised SME loans, providing significant additional funding to smaller banks and non-bank lenders to on-lend to small businesses on more competitive terms. While the challenge is significant, the government has a plan to get the economy going again, not just to address the short-term challenges, but also through a long-term plan to support jobs and economic growth. The International Monetary Fund and the OECD released their global economic forecasts in June. Australia is the only advanced economy to have its economic outlook upgraded by the IMF and similarly stand out as a leader in the OECD's forecast. This is in stark contrast to developed economies around the world. In the United States, the economy is expected to contract by 8% in 2020. In the United Kingdom, it will contract by 10.4%, and in Europe, the economies of both Spain and Italy are expected to contract by 12.8%. By effectively flattening the curve across most of Australia and providing the necessary economic support for businesses and individuals, we are reopening our economy in a safe manner in most of Australia. We have always said that Australia will likely experience periodic outbreaks as COVID-19 continues, and we will work to contain these outbreaks. But we also need to get 1 million Australians back to work. The good news is business confidence and conditions are clawing their way back in most of Australia as restrictions are lifted. Confidence is important because it's not enough just to have restrictions lifted and be allowed to open your doors again. You also need the confidence that customers will come through that door. You need the confidence to purchase stock and inventory. You need the confidence to rehire staff. The National Cabinet's initial plan for a COVID-safe Australia is being implemented. According to Treasury, this plan will see some 850,000 jobs ultimately restored, adding some $9.4 billion to the economy each month. The government is unified with one primary purpose going forward, and that is to get Australians back into work. Our government's 5-year Job Maker Plan charts the way forward for a new generation of economic success. As we begin to emerge from the crisis and as we plan for the future, we are undertaking skills and industrial relations reform, removing unnecessary red tape, supporting the digital economy, making sure small businesses are paid what they are owed on time, and encouraging all Australians to support the thousands of small businesses in their local communities. By providing an agile and responsive skills and training sector, we will be able to equip Australians with the skills they need for the jobs of the future. Getting our industrial relations settings right is necessary to make it easier for businesses to employ the workers they need. And we can support job creation through effective deregulation by removing burdensome red tape, unnecessary roadblocks, and impediments to getting on with running your business and creating jobs. With restrictions being gradually lifted across the country, the importance of our small and family businesses to the success of Australia's economic recovery is critical. We have over 3.5 million small and family businesses across the country, employing nearly half the national workforce. That is why the government announced funding for a national campaign to encourage Australians to support their local small and family businesses. The campaign, run by COSBOA, will encourage Australians to buy and spend locally and foster an awareness of the important role of small business in the economy and community. As we know, when small businesses prosper and grow, we all benefit. Small and family businesses have shown great ingenuity by innovating and adapting during COVID-19. I am continually humbled and amazed by the incredible spirit, strength, and adaptability of small business owners, so many of whom have felt the devastating effects of COVID-19. Our Job Maker Plan will harness this ingenuity to drive an agenda of job creation. Thank you for everything you have done, you are doing, and you will continue to do. The resourcefulness of Australians working together will see us emerge stronger on the other side. We will not be raising taxes. You do not tax your way to prosperity. It is this common sense approach in solving problems, demonstrated time and time again by employers and employees alike, which will secure the future of all Australians. Whilst the challenge is immense, our 5-year job maker plan will get Australians back to work. We have done this before, and together we can do it again. This is our pathway back to prosperity.
Good morning, everybody, and again, welcome to the 2020 Industry Digital Commercial Masterclass. Geez, that's a mouthful. And very much a special thanks to Senator the Honourable Michaelia Cash, who just spoke, giving us an opening address on government happenings and small business in Australia. Very much thank the Minister for spending time with us this morning. It's very much appreciated her taking time out of a day to do that for us. I also want to thank Peter Switzer, who's our MC for the series this year, and very much looking forward to Peter's commentary as we go across the week. And of course, we thank our sponsors for their support. A very valuable part of what we have and what we do. So thank you, everybody. And thank you to you for joining us today. We have hundreds of people across Australia joining us this week. And I know some of the big questions on everybody's minds at the moment is the best interest duty. Can I say to all of you who specialise in commercial lending, the best interest duty does not apply to you, unless, of course, you do the odd consumer loan. That's different. But principally, it is a consumer-based law. So for those of you who have been asking me this week, the past couple of weeks, does it apply to me in commercial? No. Do you act, though, as a broker with the interest of the clients first and foremost? Of course you do. We all get that. But the law itself doesn't apply unless you're doing consumer loans. So if you're only doing commercial, don't worry about it. It's not going to apply to you. But your conduct is always important. And of course, this series is all about your conduct and best practice within commercial and business lending. And we've got a great lineup of speakers, as we do every year for this, in regards to commercial lending, best practice, and what's happening in the commercial marketplace. And you'll hear from those speakers throughout the week. And then on Friday, we've got a specialist panel that'll join us for an hour, be emceed again by Peter Switzer. And again, we look forward to that. That panel will be really great. So make sure you're logged in for all of it this week. The e-Masterclass is going to be very exciting this year. You'll thoroughly enjoy it. And I'll look forward to seeing you across the week. So for now, that's probably enough for me. You'll want to hear more about what's going on. So I'm going to hand back over to Peter Switzer. And Peter, thank you. I'll leave things with you. Bye for now.
Thank you, Peter White, and welcome to the FBAA 2020 Commercial E-Masterclass. I'm Peter Switzer. Firstly, I'd like to thank Senator Michaelia Cash, the Minister for Employment, Skills, Small and Family Business, for taking the time to provide an open address for this event. Also to Peter White for his initiative into this commercial masterclass and his continued support for the industry. I'll be your MC for this commercial e-masterclass, which will run over the week with different content coming to you each day from experts within the commercial lending space, and you'll get tips on the best practices, of course. The content will really assist you to diversify or thrive within a commercial lending space to assist you and your clients coming out of the COVID-19 period and planning ahead for the future. All right. Please jump on to the FBAA website and click on for upcoming webinars to register for any other sessions or the live panel session on Friday, the 24th of July. Now, there are a few housekeeping things we must go through. There is a CPD hour allocated for today's session. However, please ensure you watch throughout the whole session to ensure your attendance is marked, and then you'll receive an email following the session with a CPD code and feedback survey for you to complete. A huge thank you to our sponsors. We have our platinum sponsor, Lend, who we'll be hearing from later today, and our MC sponsor, Speedy Finance, as without them, this wouldn't have been possible. You'll be receiving their contact details following the sessions, so please make contact should you have any further questions. Then there are the content presenters who have given up their time to compile this information to assist you throughout the commercial lending operation. And within these trying times, it's really important to have those sorts of supporters helping us all. Please also refer to the Industry Commercial Masterclass ebook that you can download as a PDF from the FBAA website, which outlines all the presenters' details and company info and the agenda for the week, as well as the other beneficial information within this space. So let's get started. Now I'll introduce the first presenter. It's Malcolm Withers from Pepper, presenting on whether helping brokers navigate their customers' needs and why telling the customers the story is more important than ever.
Thanks, Peter, for the introduction. And it's great to be with you today for the 2020 Industrial Commercial Masterclass as a digital event. In previous years, we spent a lot of time talking about how the customer story comes together and really how you can best navigate your customers' needs and how you actually bring that together by understanding everything the customer has. Here is a whole new world. We're moving into a totally different environment, as you can appreciate. But more importantly, what we're seeing is we're going into a whole new environment, a bit of a brave new world around commercial credit and how credit managers and what you need to do with your customers to better prepare them for their needs to actually go through, whether it's business lending or whether it's commercial property secured lending. Telling the customer's story is more important than ever before. So last year and the year before that, we really worked through and understanding the whole picture of our customer and understanding the opportunity with your customers by best placing the types of questions when you're actually interviewing your self-employed customers to really paint that picture about everything they've got, which creates that opportunity funnel for you, but also opens up a broader conversation piece as you manage your customer's relationship over the coming years. We work through what it's really important when we're starting to structure an application and what we really need to understand, and we actually really pulled it down to some of the questions that you can actually ask your customers. So these are the types of things that we worked closely on last year, but this year we need to turn around and take a new layer to the story, and that starts with not just your customer and how you bring that story together in your discussion notes or your white paper discussion or your scenarios to your lenders, but really importantly, how to actually bring that together for your existing customers in your book, as well as the customers that you're looking at today with the lending or a scenario that's on your desk. As we know, customers' worlds are being turned upside down in the business space, and we're even seeing today different states now going through different environments. When initially this all happened, it was a very static or very standardized approach to the world. We're actually now starting to see this separate out, where we're seeing some states and some customers perform better than others, whilst we see some states get into some high performance areas now being challenged in the current environment again. But what's really important for you is to make sure that you not just know your customer that you're working with today, but know all of your customers, because they need you more than ever before. They need to know that you're there for them, and they need to know that you're going to be there proactively to support them. So one of the things that's really important when I'm talking to brokers today, and some of the brokers I work closely with, about how to build out commercial and how to bring commercial into their business in a very effective manner, is around their customer base. This is a question I pose to those brokers is, are you waiting for your phone to ring? Are you using your phone to ring? And what I mean by that is, are we taking the time with our existing customer base to understand those self-employed customers? We know from previous discussions, but also from an industry statistic perspective, up to around 40% on average of a broker's book is self-employed. Do you really understand which ones of those self-employed customers are COVID impacted today? Do you know which ones are having challenges or problems, or those ones who are thriving in the current environment? We know that the different industries that the customers operate in become a really big challenging piece. We know that each customer has a different industry set, and we're going to have some which are COVID impacted, some that aren't. If you look at the retail industry, you're going to have some of your self-employed customers impacted, whilst in the retail industry, which is broadly seen as a heavily impacted environment, We're going to see them some of them not even impacted before. I can't encourage you enough to take the time to actually ring your customers, identify those who are highly impacted and affected, and take the time to hear their story and understand what they're going through. These are your customers that you've worked so hard to put on your books, and take the time to get to know which ones are affected. For those customers in your book you identify as not affected, even if you reach out with them via email and just ask them the simple question, check in to see if they're okay. It's not about always selling them something. A lot of times it's just about showing that you care and you're there for them. And we need to identify then how many of need help. We know that all the lenders across the market have been really, really good at making sure that the support is there for their customers, especially around payment pauses or part payment pauses, varying different times. When does your customer need it, and when's the best time for your customer to undertake that? We've seen quite a lot of our customers reach out and have those conversations, and it's around helping them identify when it's the right time to turn around and take some of those payment pauses, and what does it mean for them. But mind you, we see those across 3 customers. You see the customers who are really in hardship and need your help right now. We see those customers who we would almost turn around and say the preppers, the ones who thought when COVID started that they would need help and reached out early when they actually didn't need help. And now that they're wanting to do something, is now becoming a challenging decision for making that decision to ask for payment pauses. And then in the marketplace, you see your opportunists, those customers who are okay, they actually didn't need any hardship support, but they moved to turn around and take the opportunity to freeze their payments, and you'll have them customers in your business. And those customers now are having more challenges than ever. Myself, I had a conversation only last week with a broker and had to have a difficult conversation that one of his customers never even needed hardships, performing really well, has high cash stocks, and has actually businesses growing, but their customer, without the broker's knowledge, went and froze their payments. That customer didn't tell the broker that they had done that, yet asked the broker to arrange for a loan for their commercial property to purchase one, which they seen a really good deal in the market. Now the challenge then comes down to is that although the customer seen that the bank was giving away a payment pause, by not telling their broker was not able to help them and understand that they're still in effect asking for hardship and declaring hardship. And then that makes it really hard then to provide them additional new loans in the current environment as well, which you would appreciate when we're looking at the best customer interests and making sure that we're doing the right thing by them as well. So I applaud you through the processes to make sure you really get to know and understand your customer and transform yourself from being an advocate to an educator. So what I mean by that is we see brokers who certainly advocate their customers' need for finance, but in these type of environment, your customers need education. They need to understand their choices and what's the difference and what does that mean for you, and how do you not only support them but help them understand their current environment. Do the customer actually know why? There's the extra questions that are going to be coming through, which throughout today's digital conference, you'll see a lot of the lenders start to build out what does that look like from those additional questions, and how to start to build out that customer story. And does the customer know why you now need additional information? We always know that we've got those customers that sit there and say, but I can pay my loan, nothing's changed for me, so why do I have to jump through additional credit questions? Because we need to understand and put ourselves in the shoes of the credit manager who's looking at your application, and those credit managers more than ever are wanting to actually understand how your customer has been impacted in the current environment. And that's going to absolutely exacerbate itself going forward in the next 3, 6, 9 and 12 months. We're going to see that type of information needed more and more at a creditor level across our industry. And it doesn't matter what lender you're working with, getting that story right and being able to paint that picture for your customer and educate your customer so that they're prepared for that additional information needed will make applications a lot smoother and still be able to go through in a timely manner, so you can get to that time to cash really quickly, which is important to your customer. The other thing is really, do you understand what your customer's COVID story is, and can they evidence it? Many customers, and a friend of mine who runs a business, I asked them the other day and said, how are your business going? Are you seeing much impact? And they go, oh, probably about 30% down in turnover. So for me, I sort of then started to think about it, going, well, can you evidence that? Are you able to actually demonstrate you're only 30% down, or is it really just throwing a dart at a wall and sort of think that's about where I'm at. If you've got a customer that has seen downturn, what your credit managers will be looking for in a commercial sense is to understand what impact of COVID has had on their business, what impact to turnover has happened on their business, and can it be evidenced by way of recent income evidence of business banking trading statements and so forth. Has your customer made adjustments to their OPEX? So have they actually changed the way they operate their business? Have they reduced their staffing levels to offset the reduction in revenue? Or are they maintaining their current staffing levels and continuing to proceed through in a more sustainable manner through the COVID environment? So I implore you to ensure that we actually get that evidence and build that COVID story around your customers, because each customer is going to be different. Whether you've got a customer who's retail, warehousing, factory, import, export, distribution, are they business to business or business to customer? Are they in the rag trade, or are they in cafes? Are they professional services or non-COVID impacted industries? Each customer is going to have a different story that you're going to have to tell, and we need to really get to the nuts and bolts and understand that, and then layer that. What that will do for you is ensure that we're managing the customer's emotional levels, but not just the customer's, yours as well, because you won't get hit with those last minute things or challenges when your applications go through credit. Because what we do see is, if we look at that customer who went into hardship, didn't need hardship, went to borrow more additional funds, you can imagine that their emotional level was quite high, they're quite angry, and they're actually really frustrated with the entire process. Yet a customer that we're able to manage, they know when best to ask for additional funds or additional support by way of cash flow funding, and can their business sustain it. So transform your thinking from being an advocate of their finance to educate the customer and make sure they're aware of the environment we operate in, why credit is going to want additional information, and why it's really important that you're gaining that additional information for the credit manager, so that when you're doing your covering notes and you're putting your piece in there around the management, around the security, how they can afford it, or their serviceability, income used, description of the overall transaction, also putting a piece in there around, has the customer been impacted by COVID, and being able to talk to it in a very articulate way when you're talking to your credit managers and your BDMs in the marketplace when presenting a scenario to them. So in summary, please make sure that you're looking at your customers when they're looking for additional finance needs, and as you work through to that, and each of the lenders start to put together that bringing the application together in the current environment, is make sure that we tell that COVID story and it's evidence backed, and you're able to turn around and demonstrate that evidence. Understand why you should be looking at the last 4 weeks of trading statements, even if your lender's not asking for it. It's responsible to do so, to get those 4 weeks business trading statements, annualize the income out, especially now when you consider we're looking at presenting a loan to a lender that's working on 2019 financials. Those financials are 12 months old. We know the world's changed since then, and is their income level still sustainable? If it has reduced, can you talk to it and what the business has done to be able to counter that? And if the customer's not in an impacted area or region, what does that look like? You know, if I look at New South Wales example, I talked to a few brokers down and around regional New South Wales. Some of those regions didn't even have one case of COVID, and therefore their businesses continued to plough forward with no impact, although they were in the retail space, still continued to, were able to operate or shift, or the term for 2020 seems to be pivot their business to do that. Show your clients that you care, and show them that you're the expert to guide them through this current environment, and make sure that they know that you're there to help them as a leaning post for a confidant to be able to talk to if they're thinking about getting hardship and it's appropriate, and are they in hardship, are they preparing for hardship, or are they just being an opportunist, and what does that mean? Being an educator around the current environment and the options that are available in the marketplace, and how each lender is managing and changing their credit environment, but even how each lender is changing at the core, or sits behind every lender as a credit manager, that we want to turn around and accept this customer's story, and then read the story in a sense of no risk is what we really want to do. And a big thing is, don't yell at the rain. when you get frustrated, and each day, I can imagine how frustrated it can be when dealing with many of these customers, because I talk to many of you on a daily basis around this. There's no point yelling at the rain. It's not going to go away. We just need to be able to shift and change our businesses so that we're managing the right risk for the customers, but also supporting Australian businesses through this period of time over the next 6 to 12 months. Thank you very much. If you have any questions from today's session, mine or any of the other speakers following me, please email them through to Mariah Pera. Emails with details will be provided in the email following today's session, and all of these questions will be collated and answered in Friday's panel session. So thank you very much, and I'll throw back across to Peter to introduce our next speaker.
That was great, Mal. A really good point. Telling the story is a very effective way of getting through to people, and also showing how genuine you are in trying to help them. As I say, fantastic message. Now, let's go to our next presenter. This is Donelle Brooks from Lend, and Lend is the platinum sponsor for the event. Now, and she's going to present on a really important topic, shifting your business to utilise today's advanced technology for best practice in commercial lending. Take it away, Donelle.
Thanks so much, Peter. And as usual, it's always great to hear from Mal, and certainly so important right now to really understand the customer's story. We're hearing it more and more, and that also lenders have got a real appetite for the story. So thanks for sharing your insights on that, Mal. And I guess once you have got that story together, then it's really important to know that you've got a tech platform behind you that's going to do a lot of the heavy lifting to make sure your client gets the right funding. So let's start. So let's get started about why the Lend platform. So let's talk about shifting your business to utilise technology. We've got a short message here from Bill, who's our CEO, but really simply, without reading all of it, we really wanted to change the way and the architecture that brokers, borrowers and lenders interact and how they do that. And we really appreciate the insight and the feedback that we've received from our broker family over the last 6 months. And we really, really implore you to keep giving us that feedback and keep reaching out and letting us know what makes a difference to your business. So we have a look at, the Lend platform as a quick overall snapshot. It's an all-in-one lending platform. It'll save you time. You'll learn the probability of your clients getting their loan approved with LendScore. You'll retain full control of your relationship with your client and, most importantly, with your lender. Best lender matching technology, fast same-day commissions, and full CRM functionality. And what we're really going to do now is drill down into those 5 key benefits of implementing the Lend platform. So first of all, it's an all-in-one platform. So it's a single application. That's right, one application form, including bank statement collection. It instantly analyses and assesses the probability of your client obtaining a loan. Its best lender match presents the most suitable lenders, and you can choose which lender to send the application to, or you can flick it to automatic and let the system do the work. If a lender is unable to help, you can send to the next lender without recapturing bank statements and without completing a new application form. We give you real-time status updates from all of our lenders, enabling better client communication. And we have end-to-end deal flow. So that includes notifications and ensures that all of your deals you can see and understand exactly where they are at any time. Serviceability calcs and CRM tools are also available, such as SMS, email marketing, calendar and tasks. And last but not least, the process does not impact on your client's credit file. So 2, the magic of LendScore. This happens when you supply bank statements for your application, and you can do that if you're already using a bank statement provider, or we give you free access to the Illion platform through Lend. So it's a really powerful tool, and it provides you with a score that gives you a likelihood of your customer obtaining finance. All you need to do is complete the bank statement link and you will be given a Lend score. Thirdly, we've got the magic of lend size and lend match, and these technologies both work with or without bank statements. So there's no need to try and establish which lender might be suitable, and don't we love technology when we flick off the screen? But look, there's no need to try and establish which lender might be suitable for the profile of your client. As Mal mentioned, understand the profile of your client and understand the story, and then let the tech do the lifting. Continual research on the best small business loans and keeping credit criteria up to date, and onboarding new lenders is our business. We want you to be able to work on yours. Retain client control and relationships. This is super, super important, and we understand that. We provide you with the technology. You retain your relationships. No middleman to confuse the clients. Full control over which lenders you want to work with and which ones you want to send applications to. Fully branded broker to client comms, including your brand colours, your logo. Maintain lender relationships with the ability to discuss applications and scenarios submitted through the Lend platform directly with the lender. And also, you'll get access to lenders that you don't currently use now. Fast same-day commissions. Pricing and commission service is actually unmatched. We're designed to pay out the commission as soon as the deal settles, and brokers get the same commission as they've always enjoyed, but you actually get more time to work on more deals. No need to invoice and wait for payment. It's all automated for convenience, and same day refinance commissions as well. And we also give you some great reports so you can see the difference between your new, your refinance commissions. We give you all that information inside the platform. So now let's have a quick glimpse into the power of Lend. And what we want to do here is give you a look at the dashboard. So this is your dashboard view. You can view your leads by stage, your task notifications, you can view lender profiles, and add new leads, and you'll see all your key metrics. And you would think that after 12 weeks of doing this that my mouse control would be a little bit better, but anyway, let's continue. Now we're going to have a really quick look at the lead view. So you can view your leads and drill down into them via stages. So pending, attempting, in progress, rejected and settled. You can use filters to drill down even further. And you can quickly see the latest status update, and all you need to do is click on the lead to view more details. This is the lender selection and the lend size and match at work. So all you simply need to do is select the lender, click send to lender, and then you'll be asked the question, do you want this to automatically go to the next lender, or would you like to choose? And that's all getting ready for when you do get that first no. Here we have the individual lead view. So this is where you get an overview of the lead, the bank statement analysis, the lend score. You can see the history and the lender matching. And also on the right-hand side, on the far right-hand side, is where you can see your CRM tools and also your ability to send to lender. Here's a quick snapshot of the bank statement analysis. This is one very small part, and I'm also going to follow it on the next slide. There is a lot more to this analysis, but I'm trying to keep it to 10 minutes. So we have a look at the decision metrics around, we give you revenue charts, day in balance charts, credits versus revenue, other loans detected, expenses, and individual monthly transactions. So we don't just look at revenue related deposits as a total, but we look at that unique source because we know that speaks to concentration risk. And here, just to give you a quick look, we've got the monthly revenue chart and the day in balance chart. So again, flicked over that really quickly, but certainly, you know, all our details will be out in the email after the session, and please feel free to reach out to have a chat about anything that you have seen today or want more info on. Lend ED is an education series that we're really proud of that we're releasing in conjunction with the Masterclass. And again, it really supports some of the conversations that we've heard this week around education. This is purely from a lender's standpoint, addressed to you, our brokers and partners, how to best write a deal. And you'll hear from all of these 22 lenders about each of their individual products, who it suits, what the pain points are, what industries they're working in, what they're not. It really is a great education series. You're going to get insights and understanding. You're also going to get clarity and answers to some of the questions that you might not normally ask. That will result in improved conversions and increase your commissions. If you join the Lend platform before the 30th of September, you can access Lend ED for free. And recently, the Lend Education Series has also gained the approval to obtain CPD points. So for each episode that you watch, and they're only around 10 to 12 minutes each, you will be able to get CPD points. Also, as part of the education series, we have the lender profile. And this is where in text, you can go in and understand the product. Minimum terms, minimum and maximum rates, and all of the individual products that the lenders have to offer. Look, just to finish up, I really want to say thank you. Thank you for giving up your time. Thank you for attending another Zoom session or a webinar session. But I really think that the content that's been delivered to you all over the last 4 days can really add a lot of value to your business. So thanks again for taking the time to join the Masterclass series, and I'll hand it back over to you. Thanks, Peter.
It's great, Donelle, and I think the insights you gave and how we can best use technology to ultimately be better at our jobs was some really insightful stuff. And look, when you think about what Mal was talking about, telling the story, which effectively means you're a much better communicator with your customer base. Great idea. And then, of course, Donelle's insights on technology puts together, I think, a really good first day. Tomorrow, we're going to be looking at the COVID-19 effects on self-managed super funds during and exiting the event. Does a company's cash flow also impact on SMSF transactions? Alternate lending with Lend, and assisting yours and your borrower's cash flow with Speedy Finance. Now, as advised previously, please jump onto the FBAA website and click on upcoming webinars to register for any other sessions or the live panel session on Friday. That, of course, is July 24. Thanks again to our platinum sponsor, Lend, and our MC sponsor, Speedy Finance. Without you on board, this wouldn't be possible. You'll be getting the presenter's contact details in the email following these sessions, so get in contact with them for more information. If you have any questions, don't forget to email them to Mariah, and they'll be answered on Friday at the live panel session. And there is the CPD code that will be provided in the follow-up email, and a short survey to complete with your feedback. So please take time to fill this out. We really get some benefit from that. Thanks again, everyone. Enjoy the rest of the day. I'll see you tomorrow.